Let's have some volume profile practice on the Nasdaq here. I'm using a Quant Hour platform. This is the Nasdaq chart on the 10 seconds, and I'm using the 10 seconds for the Nasdaq because we have it's a thin market and we have a lot of information hidden. So smaller the time frame, the more inaccurate information we have. So with Quant platform, we're using the volume profile, and I'm going to apply the volume profile on each and every leg on the 10-second chart to extract the volume profile shape, the placement of value, and identify whether the market is resting at a value or building to move on, and all of this is the indications based on the range type as we mentioned earlier, and based on the value or POC shifting between leg and leg. So what do we need to do is open the chart and start profiling each and every leg up and down to see the again to identify the volume profile shape and the value placement. So I started here drawing the volume profile on this leg. As you can see, we have initial balance and a clear value in the range at this price. To have a better information, a perspective on the range, I start drawing the next volume profile on the next leg up, which starts from down here all the way up here. What do I see? I see it a bit noisy and creating a value within the same range of the previous value. Within this range we have the same value. That's called accumulation, and usually accumulation causes the prices to explode in one direction, whether up or down. But you can always see hints from the price movement within relation to the volume profile. So let's move on and draw the next profile from this leg high to all the way down here. And what do we see? Well, we see the value already shifted higher from where we were. We had accumulation, almost two values in the same area, and then the next leg down shifted the value higher, and market from that point started reclaiming that value and resting on top of it. What does that mean? That means that the market started slowly to leave this accumulation and find a direction. Why? Because we have a POC higher, which is the value here higher. We have the market here trying to reclaim this value price, which is price 16155 here. And as you can see, the market tried to reclaim this value and failed, tried again and failed, tried 3 times, but the third time succeed. But don't see this last attempt as a successful test to the value. This is just a fake out. So when the market behaves like a fake out like this and reclaims the value above, now I know that in an uptrend you not necessarily have to take trades up or down, but this tells you stay away from shorting. Whenever you have accumulation and the market POC value shifts higher or lower, if it shifts higher, that tells you stay away from shorting the market. We're about to take a direction up. Let's move on, continue drawing my volume profiles on each and every leg, and you have to do this to be able to stay in a focus and in the zone within the story happening. If you lose one of any of these profile within the range you're watching, you will miss a very important piece of information. So again, on this leg, the value, the POC shifted higher with a double distribution range. As I can see here, there is let me zoom in a little bit more. We have a double distribution range in here. As you can see, we have a range over here and a second range with the value shifted higher. What do I expect in a double distribution range? I expect that the market will keep ranging in between those double distribution. One of my favorite. Hit higher, lower, higher, lower, higher, lower between the double distribution. And definitely any setup you can find at the high and the low, you can trade towards these double distribution ranges, because those are considered my supply and demand, which offer the liquidity for my range. That gives me indication that the market will stay here for some time, and this is what I have done. Let's continue drawing my volume profile down. What happened here is the value stayed on top of the previous value. That tells you what? There is an accumulation here, and the market will try to push outside of the range with momentum, and this is what we see happen here. Accumulation, and the market stepped out, moved away from this. We draw the following profile to see the action happening. what do we see? Again, another accumulation on the third leg on this range. That tells me there is even bigger move will happen after this accumulation. The more accumulation we have, the bigger the move that follows up, whether up or down. And as you can see here, that's the accumulation on 3 different waves, and here's the market pushing away from that range with very strong momentum, even stronger than previous legs. To continue the story, I'm here again profiling, and I'm seeing the placement of value. That's almost like a trend day. When I see a trend range like this, a very noisy volume profile with barely the value is visible, it's visible, yes, but it's almost clear that it's very noisy profile. As I aimed before, trend days I like to stay away from because it's unpredictable. One size is taking the market in one direction, and as you can see, the market took it all the way back again, and in this case I have to profile again the way move down to see the placement of the new value. And in this case, the value here shifted lower. So if you see here in the last 2 ranges, I can see my 2 values that the market tend to play inside the range, which I consider supply and demand. I have my 2 values here at 16,232 and 16,2020. So what happens here? The market reclaimed the value and kept playing between those supply and demand range. From that value, keep moving on, custom profile, and throw the third profile, and staying within the story. This is not to tell me what trade I should take right now. It tells me about the direction and the story happening in the market. So when I have a setup, I will have a better edge and clear information. What do we see here on the 3 legs in a row? And I see the value shifting lower and lower. That tells you what? Value shifting lower, stay away from buying. Let's have a look at different ranges to identify maybe strong rejections or hidden values beside the types of the ranges that we were looking for. As you can see here, profile caused 2 profiles, leg up and leg down, caused an accumulation. And looking at the profile here, we can find the placement of the value, the following value, and as you can see here, with value shifted lower, when we moved higher on this leg, what do we see on the volume profile? I can spot a very clear hidden value over here. As you can see, this fulfilled the criteria of a hidden value. So I bring my horizontal line just to mark this value, so I don't have to stay with this profile for some time. And as you can see, I spotted here my hidden value, and from that point you can see the market is just confirmed the hidden value. So we had the hidden value first on volume profile, we marked the line, we had the confirmation on the hidden value on this candle, and then I start seeking setups. In this case here, first setup we have is almost a T3 setup. The following setup on the way down, it's almost like a head and shoulders, very small risk reward, so I'm not interested. The next setup comes around this hidden value. As you can see, 1 2 3 heads and reclaiming the hidden value. This is a 1 setup. We can also use trend lines to identify a better entry. So a better entry here when the trend line is broken, as we discussed before on the hidden values. Market stayed there. As we can see, this is a very strong hidden value, and it held the market at least for 4 waves with at least 2 setups, clear setups. And I'll keep this line on my chart to keep the hidden value visible to me whenever the market attempts to go back to it. So the volume profiles. One more thing I want to add. I didn't see this on the range I'm exploring, but something to put in mind. One exception to the hidden value is a range which looks like a hidden value, but when it acts like a very strong rejection. How does it look like when you have double distribution, like a 2 HVN? 2 HVN, yes. higher and lower, very big HVNs, and in between you can see an odd price like the hidden value we discussed before. When the hidden value lies very tightly between two big ranges, you have to consider that as a strong rejection, whether will hold the market, or the market, if the market tends to break it, it will hold the market down. And it's a clear example here. I have a screenshot which I'm showing right now. We have two big HVNs, and there is this odd liquidity lying in between, and as you can see here, this one acted as a very strong support or resistance. It's a line where it will keep rejecting the market, and as you can see here, 1 2 3 rejection, and when the market came to it, it cut very quickly and came back and tested. So if you're in this position, if you can spot this shape of this node shape, if I'm standing at this point, I will attempt a short based on the rejection will happen over here. So if you're above, you try to attempt buying. If you're below, try to attempt short from this point, because it offers a very tight risk and a big reward based on where is the next value liquidity. So let's summarize what we said in this video. While drawing volume profile on each and every leg, you identify the range of profile type to identify directions. The value shift will give us an indication of accumulation. That means a bigger move, higher highs or higher lows, that identifies the market direction. We identify the dry values, the values that reject will give us a perspective on which two values in play. Identifying the two values in play, which I just mentioned, I can identify the strong rejection areas, which allows me a very tight risk trades, and I can also identify the hidden values.